Reboot. So this presentation, we're going to be talking about the differences between a solo 401k loan versus your typical Rob's 401k for business financing. So both products are going to allow you to use retirement money to fund your business. But there are some differences and some pros and cons, and we're going to be going over those differences today. And while we've got people here in the chat, thanks everyone for joining. I would ask everyone to please like this video and please ask your questions in the live chat. I'll be fielding them here live and in person. So thank you so much for joining and taking the time. All right. So again, both vehicles allow you to use retirement money to fund your business. Now, of course, if you are going to have a business that is going to have full-time employees, the solo 401k is not an option. So this is only for people that are going to have a business that's not going to have any full-time W-2 employees. It could be a business that's going to have contractors, or it could be a business that's going to have employees, but no single employee works 1,000 hours or more. So if you're in that category, this might be an option that you want to consider versus the Rob's business financing. So the Rob's business financing does allow for employees that are working full-time, working 1,000 hours or more, but you don't necessarily have to have other employees. So there are some important differences in terms of the requirements. So with the Rob's business financing, on the right side of the screen here, there are specific rules you have to follow. For example, you have to run your business as a C corporation. It can't be an LLC. It cannot be an S corporation. It has to be a corporation that's taxed as a C corporation. Whereas with the solo 401k, you don't have to have a formal entity. You could be a sole proprietor. You could have an S corp. You could have an LLC. You could have a C corp too, but it could be any type of entity type. So that's going to be a key difference there. With the solo 401k loan for business financing, it's structured as a loan. So you're not investing in your business like the way you are with the Rob's, where you're buying stock in your business. What you're doing is you're actually taking a loan from your 401k, and then you're using that money to fund your business, right? Like, let's say you were starting some type of business that you only needed 50,000. It's not going to have W-2 employees. I don't know. It could be some type of smaller franchise. Maybe the people that work with you are all working on a contract basis. Let's say you got 100 grand in an IRA. You only think you need 50 to get it going. You could use this and essentially act as the bank to yourself. So you're not having to go to a bank, apply for credit. You know, there's no credit check. You're not paying the bank back. You're actually paying your 401k back. You're paying your future self back. So whereas with the Rob's, the way that it's structured is you're buying stock in your own business. So it's an equity investment. So with any type of equity investment, where you're buying stock, there's no obligation for the company to pay back the stockholders like there is if a company takes a loan, right? And with a loan, there's that repayment requirement. So some people might say, well, I don't want to have that debt burden, right? So let's go the Rob's route. Whereas other people might say, well, I only need 50. I can afford to pay the loan back. I'm paying myself back as opposed to a bank. I like the fact that I can operate the business as, say, an S corporation. My tax advisor's telling me that that's going to be more advantageous from a tax perspective because it's a pass-through and I get all the perhaps deductions that you might get from that first year when maybe we're not making that much money. So again, that's what we're going through this. There's some pros and cons. So let's keep going down the list. The solo 401k, again, is for an owner-only business, whereas the 401k business financing, the Rob's, that can accommodate other non-owner employees. It could be a restaurant where you've got a bunch of employees. You know, it could be some other type of business where there's a lot of full-time W-2 employees working there. So then lastly, the point of this item here is when it says limit applies. So with the solo 401k loan for business financing, it's structured as a 401k loan. So you have to satisfy those 401k loan rules. Under the 401k loan rules, the most that you can take is 50% of the balance, not to exceed $50,000. So if you have $200,000 in a former employer plan, and now you want to start this business, if you need $100,000 or $200,000, the solo 401k loan is not going to get you there, right? Because the most that you can take is 50,000. Whereas with the ROBS, you can put all the money in the business. There's no limit. All right, let's keep going. So let's talk about the cost. Obviously, that's going to be an important factor. With the solo 401k, our setup fee is $550. We charge $125 a year, starting 12 months later. With the 401k business financing, our setup fee is $4,000, and then it's $899 a year thereafter. So that's, that can be a significant difference for some folks. Some folks might say, well, I only need 50,000. I can afford to make those loan payments. I'm not going to have full-time W-2 employees working in the business. I want to be able to have it as an S corporation because my tax advisor is telling me that there's all these great advantages. Let's go the solo route. Other people might say, well, I want to use more than that. I don't want to have to make those loan payments, right? I may have employees. So the solo 401k is not a good fit for me. Let's go the ROBS route. So, all right, let's keep going. So you have this chart right here kind of recaps all these key points. So one important recap here is that the entity type with the ROBS, it has to be a C Corp, whereas with the solo, it can be any entity type. With the ROBS, it's an equity investment. No repayment is required. With the solo, it's going to be a 401k loan, so it's the same rules that apply for any 401k loan. Monthly or quarterly payments, equal payments of principal and interest. Your interest is going to be prime plus 1%, and we're talking about a 5-year term. Employees allowed. Yes, with the ROBS, yes, you can have full-time W-2 employees working in the business. No, with the solo. You still got to maintain the solo 401k requirements. Still got to meet those requirements, which again, a solo 401k, as the name implies, is for an owner-only business with no full-time W-2 employees. The limit. With a solo 401k, you've got to live with those 401k loan limits. 50% of the balance, not to exceed 50,000. With the ROBS, there's no limit. You can put all the money into your business. And then finally, the cost. $550 for the solo, which is everything for the first year, and then we charge $125 a year thereafter. $4,000 for the ROBS, which is everything for the first year, and then $899 a year starting 12 months later. So thank you again, everyone, for joining. I really appreciate you taking the time out of your day. You can always reach us at business@mysolo401k.net or my personal email, george@mysolo401k.net. Please like this video and subscribe for more videos like this. Thank you.